Show this morning, 6:34. Coming up at 7 o'clock this morning, as soon as we close out our show this morning, we're launching a podcast with Dr. Don Rich, who is the Chief Investment Officer for Esoterica Capital. And we had a really good conversation talking about, the economy, markets, kind of where we are in this current cycle, et cetera. And it was really a very good interview talking about the, discussions about, surrounding things like why the markets are detached from the economy and why there are, kind of companies struggling when other companies aren't, why wage growth hasn't picked up, we kind of a broad ranging topics that we covered. But anyway, it's a really good interview and it's going to come out today at 7 o'clock. So simply go by our website, realinvestmentadvice.com, click on our YouTube link right there on the top of the page and just subscribe to the channel. And as soon as we release it here at 7, you'll get notified of it. We'll also have it posted on our social media pages as well. So you'll get it there also. So just follow us on Twitter or Facebook. LinkedIn, we're kind of everywhere. So, but anyway, coming up at 7, we're going to release that. So one of the things that I talked to Dr. Rich about, and basically talking about the markets kind of been doing well since the bottom in March, and things have come back, but there really seems to be a disconnect between the financial markets and really the rest of America. When you start looking at the economic prosperity kind of across the board, it really doesn't jive with what we're seeing in the markets. And among those issues are kind of, the extent to which the markets are overbought. And that's where we are currently, is this, we've gotten to ourselves in a position where the opportunity that should have come from the crash back in March didn't occur because of all the stimulus and the inputs and where we are now. So we eliminated the ability for investors to actually value invest. But here's what he said.
I like to look at the price we're paying per dollar of profit. And so if you look at the expected profit margin over the next year, it has just fallen off a cliff. But of course, prices keep going up. So why is this? Is there actually a fundamental reason for the crazy risk taking?
And, and that's kind of been the real question here. And when we're looking at this, I mean, right, the answer is yes. And it really kind of comes in 3 parts. The first being 4 out of 5 companies are paying a higher dividend rate than the 10-year Treasury right now. And money growth is running at 33%. So we've got this huge increase in money supply. But anyway, this is what Dr. Rich says about this, cut 32.
Every $100 a year ago is now $133, right? And that money has to go someplace. And so when Chairman Powell says that the risks are unprecedented, he truly is putting our money where his mouth is, because we are just seeing money growth like we've never seen before in U.S. history or like anyone else is doing. So that's the second thing. That money has to go someplace. And the third thing, though, the most important thing, though, is actually real interest rates. Real rates of return in the bond market are nearly minus 1%. And so investors are looking for a positive real rate of return. That's why they're driving up prices and taking this crazy amount of risk taking right now. It seems irrational, but there's actually a very plausible reason in this crazy world we live in.
And anyway, so this entire interview is coming up at 7 o'clock, and we go through everything, talk about wage growth, we talk about the vaccine, potential for that, what's going to happen. So anyway, that all comes out at 7 o'clock this morning. So simply get by our website, realinvestmentadvice.com, click on the YouTube link and release that. But one thing he brings up about this whole issue of money supply is interesting, because there's a belief that, we can basically solve our problems by, just raising taxes and printing money. And the more that we continue to do, obviously, if we just keep printing more money and we just keep throwing it out there, then eventually our problem will get solved. But the problem is that we have a debt problem, right? So we keep going further and further into debt in order to try to solve a debt problem. So you're trying to solve a debt problem with more debt. And that, historically, that has never worked out well. And there's plenty of countries around the world that have followed the same path, right? Japan's tried it. Italy's tried it. South America's tried it. And all these companies have wound up in very, very bad situations. It was interesting, over the weekend, I had a conversation with a young girl. She's 22. And, she's very, motivated right now, right? So she's very into all the protests and kind of all the, kind of the mainstream kind of media talking points on, social media, et cetera. Very into all these, right? And it was interesting. So, I'm always fascinated to talk to people about this because, whether it's, the riots or whether it's, modern monetary theory or whether, it's just, the general, we need to change the world, we need to all be green. It's very interesting because it's a very one-sided kind of view. And it's simply just the view that they've gotten from their social media. So it's like, oh, well, where did you hear that from? Well, it was on my Facebook page, or, this is what I read on Twitter. And, if it's on Twitter, it's got to be true, right? But it's interesting once you start talking to them, two things occur. One, there is, at the beginning of the conversation, there is an absolute unwillingness to accept any view or information that contradicts their own, right? And it's called confirmation bias. And we're all subject to this, but it's gotten really bad over the course of the last few years because of social media. We can lock ourselves into our own little information silos of confirmation bias on social media because we exclude everybody's views that don't agree with ours. So it's really accelerated this process that once we find, our quote unquote mission in life, then we only focus on those views that support us. So whether or not you agree with a certain situation, whether it's, green energy or the riots or whatever it is, we tend to lock ourselves in that view and only hear those views. We're unwilling to hear views that disagree with us. And so we had this conversation and we were talking about this, and I go, and so I started to slowly move the conversation towards the impact of debts and deficits and the impact on economic prosperity, because she's 22, graduated from college, right? Got her degree, no job. And lots of hopes though, right? Living at home with the parents right now, so it's all fine. But lots of hopes here that she's going to have the same life that her parents have. Now, her parents are very successful. They have a big house. They've done very well for themselves. But, he has owned his own business. He built his own business, really participated in the whole views of capitalism. And that's the interesting thing. This kind of view that's coming up is this idea that we need to tear down capitalism, right? We need to get rid of capitalism and move towards socialism. So we need to start printing more money. We need to, provide direct checks to households. Debt doesn't matter. That's the whole premise of modern monetary theory. Debt doesn't matter. We can just do this because we can just print money to pay for it. And there's no consequence, right? There's no consequence for any of these actions. But it doesn't lead to broad-based economic prosperity. It actually reduces it. And there's plenty of evidence throughout history and other countries that show this to be the case. I'm just not making this up, right? So we're having this conversation. I go, well, what about South America? What about Italy? What about Japan? And she, and there was no real answer to come back. It's like, well, that's different. No, it's not. No, it's not. You can't just pretend that it's different. But see, this is the interesting aspect of it, right? We have this idea that we're going to do something that everybody else has tried and failed at, but we're going to be successful at it. And it's going to provide that utopian idea of a society where everybody prospers equally. And all this opportunity is available for everyone. But it doesn't, in history, that doesn't show up. And it's too soon yet, right? It's too soon. It hasn't been long enough yet. But in a couple more decades, this generation that is promoting these ideas, when they're in their 40s and when they're in their 50s, they're going to realize the errors in their ways, and they're going to be pushing back. And it's always interesting because there's an old saying about how do you change a Democrat to a Republican? Give them money. Because all of a sudden taxes matter, right? Taxes matter. But the reality is that we have gone down this, as I was saying a minute ago, we've kind of gone down this rabbit hole. We've indoctrinated an entire generation into a misinformation program that these things actually work. But without the ability to have a conversation to where you can say, look, these choices you're making today, I understand that they sound good, but the results are not good for you. Without being able to have that conversation, the solution is never available. And so as we go down this rabbit hole, there's no basically returning from the pit until the end result is finally met. And if you really want to take a look at it, Japan's a great example. 30 years later, they've had no economic growth. Italy's the same way. Be right back after the break.
Walk this way, talk this way, walk this way, talk this way, walk this way, talk this way. Just give me a kiss.
Got questions for Lance later? Ask now at realinvestmentadvice.com.